Hello and welcome to Bloomberg Quint Live, and you're watching Trend Spotting. I am Shraddha Babla.
Good afternoon, Shraddha. Good to have you with us. I'm Patil, and in the next 30 minutes, we deep dive into specific trends in the markets to draw out key takeaways and its implications for investors. But first, the headlines. Friday fervor on the Lux Street as markets open at record levels and continue to maintain momentum. And broader markets in line with benchmarks, India VIX cools off. And Brent hovers around the $70 a barrel level as US stockpiles decline. And TCS is the top Nifty loser after reporting weaker than expected growth in the BFSI segment in the third quarter, whereas Infosys will announce its third quarter earnings today. The country's second largest software services provider may report a drop in profit due to seasonality.
All right, let's first take a look at how the markets are trading at this hour. The equity benchmarks have extended their record run led by gains in Reliance Industries, ICICI Bank and HDFC Limited. So BSE Sensex is up about 0.3% or 85 odd points, while the Nifty 50 index was trading about about a quarter percentage higher after hitting a fresh record of 10,690 in opening trades. And amongst the sectoral indices, the metal and the capital good indices are seeing strength, while it's the IT, pharma and realty indices which are seeing marginal losses down to the tune of 0.2 to 0.4%. Again, amongst individual names on the Nifty index, Z Entertainment was leading the gainers, closely followed by Vedanta, while TCS shares dropped more than a percentage a day after announcing the third quarter numbers. And the company said that sales from the key banking and finance sector, which contributes most to its turnover, fell 2.1% sequentially. But the broader market trend remains positive, with the advanced decline ratio standing at about 5:3.
Right, Shraddha, so you mentioned the advanced decline ratio, that is the market breadth, is positive. So let's pull up some of those stocks which are also looking at big moves. And there you have about 985 stocks gaining as against 565 stocks declining on the National Stock Exchange. We have Ratan India Power, which is gaining as much as 13%, or the Nifty 500 index. So that stock's doing well in today's day of trade. A lot of volatility when it comes to this particular stock, but that's followed by Den Networks, that is also up by nearly 12% in today's day of trade. In fact, the entire media pack is looking at extreme moves. So we have Den Networks moving up, we have Sun TV moving up. On the other hand, we have a lot of weakness in something like a Dish TV. Of course, this is after we've had further developments with respect to problems in Videocon. And of course, this also puts their merger into a little bit of challenge as well as problems. So while Videocon is up for 4%, surprisingly, Dish TV is down as much as 5.5–6%. But moving on, I do also want to consider how Snowman Logistics is doing very well. In fact, that's up 8% in today's day of trade. On the losing end, I am looking at some weakness in something like a Shoppers Stop, which is down 3%, and IDFC Bank, which is also down around 2.5%. But on the whole, as Shraddha just mentioned, when it comes to the advanced decline ratio, it continues to show a positive trend, and that is something that the bulls will take heart in, Shraddha.
Okay, Agam, but from what you've said, let's actually talk about what we are going to be covering on Trend Spotting today. To start off with, what does the second half of the fiscal look like for Lux Industries? We asked the Senior Vice President Udit Todi. Then we connect with Ashwin, Patil of LKP Securities, to discuss the December quarter, bringing in a positive surprise for the players in the auto space. And what does the sector expect from the budget this time around? And what impact of rising oil prices is likely to be seen on Indian consumers? We cover all of that in the next 30 minutes. Well, on to the first trend for today. It has been a stellar 2017 for Lux Industries with gains of over 100%. The company does expect its EBITDA margins to expand by 100 to 150 basis points in the next 2 to 3 years. With the earnings season upon us, how is the company placed to answer all of this? We have with us on the phone line the Senior Vice President Udit Todi. Mr. Todi, thank you very much for joining us here on Bloomberg Quint. I want to start off by discussing your economy segment, which the company, I believe, is currently focusing on. I believe it contributes close to 45% to your overall revenues. Just want to understand if the contribution from this segment is likely to move higher, and how will that impact your product mix?
Good morning. Thank you for having us on your show. So, taking your query forward, Lux Industries has primarily been operating in the economy and mid-premium segment, but of late we have launched our own premium brand by the name of On. So it has been operating in the market for about 3 to 5 years now, and it's been giving fairly good results, contributing about 10% of the top line. As recently as November last year, we have tied up with the brand called 18, which is a brand owned and promoted by Virat Kohli. So we are very upbeat on this brand, and Virat has been very aggressive in promoting this brand. And so we are going forward. We are very hopeful that this brand is going to give us a good share of the premium segment.
Okay, Udit, good morning. So you did speak about in the entry and your business in the premium segment, with your focus largely being on the economy and the mid-premium. In that case, if you could tell us about how your product mix is likely to change, if at all, in the next 1 year or so, and in that case, what would it mean for margins?
So see, 1 year is a very short horizon for any new premium category brand to make a presence. But yeah, I think the first 2 years is the testing period when a new product is launched, a new brand is launched. But nonetheless, if you look at our past performance with our premium brand, it has given us good results with a 10% share of the top line. And with a new brand 18 coming in, we are very hopeful that, we can't give you a 1 year prediction, but maybe 2-3 years down the line, it should be somewhat similar to where On is standing now.
Udit, what is the current production capacity and any expansion plans that are on the annual, at least over the next 2 or 3 years?
So in our industry, we follow a very flexible mode of production. So for us, we have recently undertaken a capacity expansion last year with our Dankuni plant, which has also helped us boost our margins. And I think in the next 1 or 2 years, we are not looking at any further capacity expansion.
All right, Udit, we were going through a report which suggests that you're targeting about 15% annual growth, and you're looking at volumes growth around 7 to 8% over the next 3 to 4 years. My question then is, how do you see pricing, especially when pricing is such a critical element with respect to the economy segment?
I'm sorry, I didn't quite get your question.
Well, my question was that how do you see pricing of your products over the next 3 to 4 years, especially when you have such a large exposure to the economy segment, and pricing and prices of your products is quite critical, if I'm not mistaken, to the economy segment?
Right. So if you talk about pricing, so the boost which you are seeing, the growth which is coming for the overall company, so it's the margins. As far as the margins are concerned, we always price our products so that the margins are not hampered in any case. So keeping that in mind, and economy segment, the prices, as you correctly said, is a bit volatile. So a lot of it depends on what the costs are coming up at the point in which you're trying to sell. But whatever pricing is arrived at is always arrived keeping in mind that the margins remain intact. And as far as our growth strategy is concerned, we are pushing more and more towards the premium segment. So premium segment is, I would say, not too much dependent on prices. So going forward, I think if you look at the overall margins of the company, they will be more attuned to the premium products than the economy products.
Also, Udit, geographically, I believe you have a stronger presence in Western and Central India. Could you tell us about what your expansion plans are with respect to the Northern and Eastern regions?
I'm sorry, but I think we're very strong in Northern, Eastern and Central India. As far as our weak positions are concerned, we might be slightly missing out on the Southern India aspect. And over the last few years, we've made concentrated efforts on South India, and it's showing good results.
Right, and can you tell us a little more about your distribution plans in these markets as well, in terms of expansion and perhaps investments that you're putting in distribution as well?
So if you talk about the distribution channels, so it's mostly distributor based. So it's lesser of EBOs and MBOs. So in that way, the investment which goes into the distribution channel is not much. For us, it's more of appointing distributors. And as far as geographical expansion is concerned, we have already, South India is one market which we have been tapping over the last 2-3 years. And also, as far as exports are concerned, we have significantly increased the number of countries which we are exporting to.
Udit, I did have a follow-up question on your plans in marketing and advertising, and I do know that you have to tie up with a lot of well-known personalities. My question then is, for the next year or so, how are you planning your ad spends, and what would that be as a percentage of your revenues, if you could share any numbers?
So as a strategy, we always try to keep our advertising spend somewhere between 7 to 8% of our top line. And once we arrive at a budget, after that the budget is again divided into the different brands which the company owns. So no matter if the ad spend on a particular brand goes up, in that case the ad spend on another brand goes down. So that we try to maintain a 7 to 8% spend of ads as compared to the top line.
Okay, what is the scope of e-commerce for the company, considering its target customers? Again, what is the kind of traction, and could it be a substantial revenue generator eventually? What are the plans with respect to e-commerce?
So the company already has its presence widely across almost all the e-commerce platforms which are available as of date. And the movement which you're seeing on the e-commerce is more towards the premium products. So the premium products as a percentage would be higher as compared to the economy and middle level products, because the economy and middle level products are already so widely spread out across all the markets that is very readily available. And so it's mostly the premium products and the mid-premium which see more traction on the e-commerce.
Right, Udit, I also wanted a word on your export markets, and you do have very strong presence in Africa and Middle East. Could you tell us a little more about expansion in these markets? That's one. And the second part of the question is whether or not you are looking to enter new markets.
So as of now, we've been concentrating more on the, as you correctly said, Middle East and the African markets. These markets are, very, very nascent markets, and the year-on-year growth for all these markets has been pretty high. I'll not be able to give you any figures as of now, but if you talk qualitatively, these markets have been performing very well. So right now, we're not looking at any other markets. As far as exports are concerned, it's primarily Middle East and African nations. In fact, in Africa as a continent has been so big that if you look at the number of countries which we're exporting to in Africa, we're trying to increase that every year.
Udit, as of now, could you give us at least the number of the exports contribution to the overall revenues?
That is somewhere about 10% of our top line.
Okay, but this is likely to increase, over the next couple of years, I'm assuming.
Right.
Okay. Right.
All right, thank you for joining us here on Bloomberg Quint with all those details, Udit. But let's shift focus now to the commodity aspects of oil marketing companies. Now, signs of a pickup in global growth coupled with supply constraints have pushed crude oil prices higher and higher over the past few months. But how much of an impact does this have on the Indian fuel consumer, and more importantly, on the oil marketing companies? Somit Sarkar is standing by with an analysis. Somit, how severe has the hit been as far as the gross marketing margins are concerned?
So if you see in this chart, in the last 6 months, crude prices have picked up. Brent crude has moved from around $47 per barrel to close to $69 per barrel. And in the same period, if you see, petrol and diesel prices in a deregulated and a market where there's a daily pricing mechanism going on, has moved up from around 67 to 74, while diesel from close to, you can see it's around 53 to around 67 rupees that has moved down. So on an average in this period, petrol prices and diesel prices have gone up by around 9% and 11%, while Brent crude has moved up by around 45%. So let's see what has been the impact on the oil marketing companies of this, and why is this the reason. So firstly, if you see in the last 6 months, rupee has appreciated. This is not past year, it's in the last 6 months rupee has appreciated. In the last 6 months, rupee has appreciated by around 1.3%. Rupee appreciation works in favor for these companies because they need to spend less money to purchase a barrel of crude oil. Secondly, in this period, government has also lowered its income by lowering the excise duty on fuel by rupees 2 per litre on both petrol and diesel. So this cut down on excise duty has worked in favor of the companies and acted as a buffer for the rising crude prices. Now, things that didn't work in favor of the oil marketing companies. First thing, in this last 6 months, they have lowered their gross marketing margin. So in July, they were earning around 3.6 rupees and 3.3 rupees on petrol and diesel on every liter of petrol that they sell and every liter of diesel that they sell. In July, they were earning around 3.6 and 3.3 rupees, which came down to around 1 rupees in December. So they had to cut down on their income by lowering their gross marketing margins. Secondly, in this period, if you see, the demand for oil has also come down. In 2015 and 2016, the petrol and diesel consumption in India grew at around 7% and 7% each year. But in 2017, it has grown by only 4%. So you can see clearly the consumption of petrol and diesel in India has also come down from 7% to 4% in 2017.
Well, thanks for that, Somit, and thanks for giving us those details. Of course, crude is going to be extremely critical, not just for the Indian economy, but perhaps for the Indian stock markets as well. We'll keep an eye on, further developments there. But for now, crude is certainly inching up. That said, let's move on to another sector where it certainly has at least, some exposure to crude. That is because, the crude derivatives go into as fuel in the auto sector. So, speaking of the auto sector, we've seen a good 2017. 2018, however, the last 10 odd days have not been so great for the auto sector. That said, what we've also noticed is that SIAM came up with its outlook, and it's revised its outlook upwards with respect to passenger vehicles, which currently stands at around 7%. But I think the real takeaway in yesterday's revision was the commercial vehicles growth, which is now expected to be at around 13% for FY18 as against 4 to 6% earlier. So these are really good takeaways, especially with respect to the outlook in the auto sector. So to discuss the same, we have Ashwin Patil, who is Senior Analyst at LKP Securities. Ashwin, thanks for joining us. I want to talk about your expectations of the budget as well as the earnings for this particular quarter. But before I go there, I also want to address, what you make of the SIAM data. I'm sure you've been keeping track of all the volumes, so you're well versed with what's going on. But the commercial vehicles, revival is more critical. What do you make of the SIAM data? Ashwin, can you hear me?
See, the commercial vehicle space already is doing really very well, because on the last year's lower base post demon, the growth is quite strong. Hello?
Yes, please go on, Ashwin. Please go on.
Should I continue?
Yes.
Hello? Yeah. As I said earlier, that on the lower base of last year's 3Q, we have seen a strong growth right from the month of November. December was really very strong. And one thing which we have noticed, and which some of the managements have said, that the compulsion of ACs and the blowers which will be coming for commercial vehicles, the cabins which are there in the commercial vehicles, that will be implemented from the month of January, and hence there was some sort of strong pre-buying in the month of December. That was one thing which led to strong numbers. And on the other hand, we know that on the lower base of last year, the recovery in 3Q has been really very strong, and the growth, the volume numbers have come really very strong. And thirdly, we can assume that some of the commercial vehicle cycle uptick that we have been talking since a long time, it has started showing some sort of green shoots. And these three factors combined have led to strong numbers in the month of December. Now, going forward, I think that January will be slightly depressed as compared to December on a month-on-month basis, but on a YOY basis, it will be strong on the lower base of last year. Because the prices of the commercial vehicles may go up slightly because of the AC compulsion that is coming up from 1st of Jan. But going forward from March onwards, things will settle down again. and the commercial vehicle uptick that we have been seeing and we have been talking about will come to the forefront once again, and we think that with the economic development which is happening, the issues which were there in the mining are clearing off, and also the kharif sowing has been really kharif output has been really very good, and Rabi, we are yet to know what exact how much percentage growth we have seen in sowing this year. Depending on that, the commercial cycle will be moving up.
Okay, the CV cycle, of course, or at least the sales have seen a pickup in December, Ashwin, and so have the two-wheeler sales. But the passenger vehicle segment sales have been absolutely sluggish. Just wanted to understand what explains this underperformance in the passenger vehicle sales, and if you see this trend continuing over the next few months.
See, December as it is it's not a very strong month for passenger vehicle sales, because consumers postpone their buying in order to get a new date on the vehicle for the registration date of the vehicle to the next year, so that it gets a better resale value. And also we know that most of the companies like Maruti Suzuki, etc., they take a biannual shutdown for maintenance purpose of their various plants. So in the month of June as well as December, Maruti takes a weekly shutdown, a week-long shutdown of their plants, and that results into a slight reduction in the sales of companies like Maruti Suzuki, Hyundai, etc. And since these two companies are the major market shareholders of the passenger vehicle sector, we see slight slowdown in the month of December, but it's nothing to worry about. It's nothing operational. It's just a technical thing, and going forward, like from the month of Jan onwards, I think things will come back to normalcy.
Right, Ashwin. So let me come down to your expectations from the third quarter, and you've seen the volumes numbers for a lot of these companies. So I'm going to start off with the passenger vehicles, the companies which have more exposure to passenger vehicles. What are your topics here? What do you like? What are your expectations in general when it comes to the auto sector? If you could tell us a little more about that.
See, passenger vehicles, definitely Maruti Suzuki has to be a topic within the passenger vehicle sector. The other company which is there is Mahindra and Mahindra, and Tata Motors is the third one, but they have other businesses as well. So a pure play passenger vehicle company is Maruti Suzuki, and it is, we like it at these levels also, because we think that with the Gujarat plant commencement and the volume which it will be pouring in the ensuing quarters, the volume growth of Maruti is going to be in the range of about 10 to 12%, and that is quite a buoyant show. We think that will be coming from Maruti. Also on the margins front, the company is doing well on cost cutting, and also the yen appreciation is not that strong as compared to rupee. So overall things are looking quite good for Maruti, and the demand is still quite robust for all of its products. The product pipeline is also quite strong. So based on all these factors, we still like Maruti, though the valuations are slightly stretched at this point in time, but still on FY20 basis we are having a target close to 10,500, which is still a good upside from current levels. Then coming to Mahindra and Mahindra, mainly its business is driven by the FES segment, the farm equipment sector. And going forward, we think that with if the Rabi, as I said earlier, if the Rabi sowing is strong, and the company can see a good upside from these levels as well. And we are expecting FES segment to grow at about 13 to 14% this year, and to continue this going forward. If we get a good monsoon in FY19 as well, then the company is going to perform well. But on the SUV side, on the passenger vehicle side, the company is coming up with a couple of launches in FY19, and that has to drive the sales. But the top pick still remains Maruti Suzuki. On the Tata Motors front, we think that the new launches like the Hexa, Nexon, Tiago, Tigor, etc. are doing really very well for them, and the passenger vehicle business is doing really strong for them. But the overall valuations are pinned down from JLR as well as the commercial vehicle business, which is also looking a good strong uptick. So in the passenger vehicle space, we like Maruti Suzuki. And if we compare it, with other companies within the, like Tata Motors is there in the commercial vehicle space as well. So Tata Motors is actually the top pick within the entire auto pack that we are tracking, based on the commercial vehicle uptick that we are seeing, as well as the domestic recovery, which we expect the company to come into profits in FY19 third to fourth quarter. And JLR is as it is, we know that what are the issues the company is facing on that front. But the margins are looking quite strong on that front, and we are seeing a quite strong recovery on that part also. Plus, Tata Motors has not participated in the rally that we have seen of late. So it is quite, it is due for it. So we think that within the entire auto pack, we like Tata Motors, and followed by Maruti, Hero MotoCorp, and Bajaj Auto.
Ashwin, just a quick take on how do you think the margins in the third quarter will pan out, given that commodity prices have strengthened considerably, and if you believe that the recent price hikes that were announced are adequate, to sort of cover up for the higher input costs?
See, in the third quarter, we know that the discounts are high because of the festive season. Also, the RM prices were high. Still, steel, zinc, lead, copper, all the metal prices have actually moved up. But the rubber prices were, quite not that high, had not got that high. So overall, I think, the blended RM cost is going to move up, and companies may see some sort of reduction in the margins as compared to Q2. On sequential basis, definitely the company will be seeing some sort of reduction in margins. But overall, the companies are, based that they have done well on the volume front. So product mix also matters. The operating leverage that some companies will be getting also will be slightly offsetting the increase in the RM prices. And some of the companies like Maruti, Hero, etc. have taken good cost-cutting initiatives. They have been taking them since long time, and that may also able to offset somewhat the RM price movement. But overall, if you weigh the pros versus cons, then definitely I think there will be some sort of pressure on the margins in Q3.
Ashwin, finally, I just want to ask a question on the rural-facing auto companies. There are some expectations that this budget will focus on the rural areas. In that case, what are the stocks that you would be watching out for with respect to what you can expect from the union budget?
We think that there will be some sort of relief for the farmers, because we have seen a strong challenge to the BJP government from Gujarat elections. The farmers were the ones who had not actually voted for the ruling party. And going forward with elections coming in Rajasthan, MP, which have got huge farmland, the company will be definitely doling out some sort of incentives for the farmers, and so that the rural income improves. In that case, I think that the companies which will benefit is definitely Mahindra and Mahindra. It's at the top, because farm equipment segment contributes about 40% of its top line and about 50% of its EBITDA. And the second company which comes to my mind is Hero MotoCorp, because about 55% of its volumes come from rural markets, and the company is doing really very well in those markets, and we think that the demand is majorly coming from the northern markets where the elections are going to happen. So I think these two companies are definitely on everyone's radar. Thirdly, I think Escorts is also going to get benefited out of it, because almost entire portfolio comes from the farm equipment business. So these three companies come to my mind when the rural the uptick is considered in the coming budget. Also, Maruti is also one of the candidates, because about 30% of its volumes come from rural markets. So these four companies are expected to get benefited out of the upcoming budget.
Thanks for that, Ashwin. Of course, plenty of stocks are mentioned by Ashwin out there that could have some impact when it comes to implications of the union budget. But Ashwin, thanks for joining us and bringing us your perspective from the auto sector. Plenty of variables to look at and to look forward to. But we've run out of time on this show, so with that, it's a wrap on this edition of Trend Spotting. Don't go anywhere. Up next is Hot Money with Darshan Mehta. So stay tuned in a Bloomberg Read.